Good evening everyone, and thanks for joining us today. Happy New Year to everyone. Let 2024 bring in a lot of happiness, success and prosperity to all of you. We are very delighted to share the company's PBT and the performance during last quarter. Company's PBT surpassed the milestone of 2,100 crores for the first time. All of you will remember that last year as a whole, we had 2,003 crores as a year as a whole profit. PBT for the first 9-month period is 2,109 crores, and we are extremely happy about it. During Q3, the company continued its sustained growth in revenue, EBITDA, and profits. Company continuously surpassing its own milestones due to excellent product pipeline, thanks to the customers and their confidence on TVS Motor. Now let me get into a little more detail about this quarter. During this quarter, company's operating revenue grew by 26%, 8,245 crores as against last year's 6,545 crores during Q3 last year. Domestic ICE two-wheeler market, company sales grew 33%, almost 8 lakh units as against last year's 6 lakhs. All of you know the industry growth. We have done much better than the industry growth. In international market, the company sales grew by 4% at 2.16 lakhs against last year's 2.07. Here also we have grown better than the industry. During the quarter, company sold 48,000 units of electric vehicles as against last year's 29,000. Here also we have done better than the industry. Total two-wheeler sales grew by 27% at 10.63 lakhs against last year's 8.36 lakh units in Q3 last year. Total sales of three-wheelers is at 38,000 as against last year's 43,000 in Q3 last year. During this quarter, company's EBITDA grew by 40%, 924 crores as against EBITDA of 659 crores during Q3 of last year. And EBITDA margin for this quarter is 11.2, improved from 10.1 last year in Q3. PBT for the quarter grew by 63% at 775 crores as against 475 crores during Q3 of last year. Profit for the current quarter includes other income of 73 crores relating to gains realized from investments. Profit after tax for the quarter grew by 68%, 593 crores as against 353 crores of Q3 last year. Now, cumulative 9 months, company's operating revenue grew by 19%, and we are at 23,608 crores as against last year's 19,773 crores. As I told earlier, PBT for the first 9 months period grew by 45% at 2,109 crores as against last year's 1,457 crores. And during the first 9 months period of this year, we have already crossed last year's overall profit of 2,003 crores. Profit after tax for the 9 months period grew by 48%, 1,598 crores as against last year's 1,081 crores. On EV, Q3 we witnessed industry coming back, and all of us know that there were some tactical actions during this quarter. TVS iQube is growing ahead of the industry continuously over the last 6 quarters. We are continuously expanding the availability of TVS iQube in India. As we speak, TVS iQube is available more than 400 touch points. Progressively, we will increase this quarter to much more number of touch points in India. We have also started exporting TVS iQube. As we have communicated earlier, we will have a series of products this financial year, for different customer segments, and we'll have a complete portfolio of offering in EV. We will be launching these products in coming quarters. With a well-planned product lineup planned from TVS and the continuous improvement in infrastructure, we are confident that we will continue to be a strong player in EV segment. On TVS Credit, first time we have crossed the book size of 25,000 crores. To be precise, we are at 25,300 crores. And TVS Credit Service PBT for the quarter grew by 75%, and we are at 230 crores as against 131 crores during Q3 of last year. On outlook, the GDP definitely is growing better than all of us expected. However, there are some challenges in sowing, but we could see some momentum coming back in the rural sector during Diwali season. And we expect in Q4 this momentum should continue. International market, slowly and steadily we are seeing change in positive growth, but it is taking a little longer than what is expected in many markets. Our share of companies' premium product sales are growing, and we will continue to invest in that, and we will grow. All of you know that during Q3, we announced our entry into Europe market by signing strategic partnership with Emil Frey. It is a 100-year-old enterprise, and we are very confident that this will be a great achievement for TVS Motor in coming years. Company will launch both ICE and EV products in select markets in EU. We are prioritizing the countries with strong two-wheeler demand, coupled with existing Emil Frey's infrastructure and resources to build this distribution network. With strong portfolio of brands starting from Apache, Jupiter, Jupiter 125, Raider, Ntorq, our Star range, HLX, Radeon, TVS King, TVS Ronin, we expect, thanks to the customers' confidence on us, we will continue to grow ahead of the industry both in domestic and international markets. Overall, all of you have seen Q3 has been a great quarter for us, and we will continue the same momentum in terms of both revenue growth and EBITDA growth going forward. We will continue to invest in product technology going forward, and definitely you will see many more products from the company. We have already seen the EBITDA growing in the last 3 years, and this quarter is the highest, 11.2. We are confident that we will continue to leverage our revenue growth, premiumization, sustained cost reduction initiatives to improve profitability in Q4, that is this quarter, the coming forward quarter, and going forward. Thanks for your time and your continued trust on the company. Thank you. Once again, I would like to wish all of you, and before close, PBT for the first 9 months, we have already crossed 2,100 crores, first time during the first 9-month period on the history of this company. Thank you.
Should we open up for questions?
Yeah, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. I'm just trying to understand the product mix. That's my first question. So, if I compare versus last year fiscal, if we just look at scooters, IC scooters and mopeds, I think we are about 60% of the volumes were from that category, and iQube was about 4%. Versus YTD this year, first 9 months, it appears that iQube has improved to 6% of the mix, but the IC scooters and mopeds portfolio has come down by about 500 basis points. So just trying to understand, were there any sort of product discontinuations in the IC scooter and moped portfolio? Scooty Pep in the domestic market, Vego in the export markets, just trying to understand that a little better.
Scooty Pep is one product we have discontinued, because when we look at the overall portfolio of the company, we looked at and we have enough good quality products in terms of Ntorq, Jupiter 110, Jupiter 125, and there is a huge opportunity to grow these products into the market. So it was a very measured call. And overall, I think we have to look at overall growth. I think we have done very well in scooters. We have done very well in EV as well. Okay. In terms of, like I said, what is most important is overall we have to grow ahead of the market, and that has happened. Okay. Moped, there is a slight uptick. That's why I said there is some change we are able to see in the rural market. But it's early signs. I think we have to wait, because still the buying power of these entry-level customers, especially in the rural, it's only improving. It has not come to the normal level. So we have to be a little bit patient here. Scooters and EV, we are very confident that going forward it will do extremely well.
Got it. That's helpful. Second question is specific to the Raider. I think product continues to do very well. Seems to be a lot of full demand in the market. It appears that you have been able to take some price hikes on the Raider. So just trying to understand, I think that sports 125 category seems to have more product launches from peers. There seems to be some price cuts also from some of your peers. So what's giving you the confidence to take these price actions on the Raider? And also just related to that, have you been able to take price hikes in January across the portfolio?
No, Raider is a great product. I think the customer confidence is what is seen. Like I said last time, Raider is one offering from the company which is very well accepted in the market, and quarter after quarter we are able to see the customer retails going up, and market after market we are seeing huge success. I think this is purely the connectivity with the customer. And we constantly look at the opportunity, and depending upon the opportunity we look at the pricing. And as of now we have not increased any prices and in January or even in December.
Got it. That's helpful. And lastly, just a housekeeping question. If you could just share the exports revenues and the spares revenues for the quarter, please.
Give me a minute. Parts revenue is around 792 crores for this quarter, and exports just a minute. Exports is about 1,882 crores.
Got it. Thank you very much and all the best.
Yeah.
Thank you. The next question is on the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. Just a follow-up on what you talked about spares. We have seen that your spare part contribution to the revenues remains sub 10%, which has been the trend for the last 5 years. While some of your peers have seen their spare parts penetration improve from 9.5% of revenue to almost 14-15% of the revenue. Just trying to understand, is there opportunity there, or what explains such sharp spare parts surge? And just trying to understand, is there availability challenges for your spare parts in the aftermarket which you can address with faster growth in the spare parts? Because the reason I'm asking this is, on a last 5-10 year horizon, your volume growth has been the fastest in the industry. It has been the highest in the industry by a wide margin. And so to that extent, I think your spare parts velocity ideally should be better than the competitors. So I'm just trying to understand what is missing here, and are there any thoughts or plans to improve the spare parts penetration? Because not only helps the customer with better access to quality parts, and also it is much more profitable than the product revenue, product margins, right? So if you can just help us understand this, sir.
See, spare parts is also growing. If you look at our revenue growth, overall revenue growth and spare parts growth, we are doing extremely well. But we constantly look at where are the opportunities in terms of more penetration in spare parts. But fundamental thing is we want to push spare parts. Also, same principle of the stocks and the authorized parts stockists as well as the retailers. We reach the right kind of levels of stock, because we don't want to push the numbers just extra. I think what is most important is based on consumption, based on the service productivity in the dealership. That is the way we look at it. But every time when I look at it, there is opportunity. Definitely there is opportunity to.
And thanks a lot for that, sir. And on the demand side, sir, you said rural has seen some traction. But how do you look at rural versus urban? Because you are one of the few guys who has a portfolio which is relevant in both urban and rural markets. So how do you see the rural versus urban bit? Because there is a bit of a thought process that 100cc demand is coming back, rural demand is recovering, and it could kind of have a drag on the scooterization, the premiumization trend. So from your vantage point, how are you seeing these trends playing out, sir?
See, rural too early. Because if I look at it, there is only small improvement in terms of the entry level and moped. It's not a significant change, but I'm very sure that these are markets where they had maximum problems post COVID and income level, and because of the transition to the electronic fuel injection because of OBD, the BS6 and the further OBD phase A. I think the prices have gone up. So I think the transition is happening, and as you know, the retail financing is also supporting this set of customers. I'm very sure that quarter after quarter you will see small improvement in this growth. However, significant growth will be seen in semi-urban and urban. So this is something we have to be conscious. However, I think slowly you will see the change, and I'm very sure that the sentiments are becoming positive, so we have to wait and watch. One level of change we have seen this year in the Diwali season.
Okay. Sir, on the P&L side, your other expenditure and employee costs continues to kind of grow reasonably ahead of the revenue in a way, more or less on a quarter-on-quarter basis. So just trying to understand what will be the sustainable trend you're looking at, sir, especially for other expenditure, because last quarter we had a couple of launches which were there only the 2Q base. Even on that base, we have seen a further improvement or a higher spending there. And even on the employee side, if you can just help us understand by when do you start seeing it as a percentage kind of normalizing on a sequential basis, sir?
See, other expenses, let me answer first. I think there is an increase in the packing and freight expenses because of the expenses really going up, the prices going up. And as you know, this year Q3 we had the full season in terms of both Dasara and Diwali. And you remember, we definitely invest in, we keep it as an investment. We don't look at it as a cost on the marketing side. I think one of the reasons why Raider and Jupiter 125 and some of the portfolios are doing extremely well is the kind of investments what we have made. And that will help us to take it to the next level in terms of, and what is most important is when the revenue starts growing up, this percentages also will help us. And on employee cost, this is the area where we are investing in, especially in the new technology areas like software engineers and also in analytics and digital and also electronics. I think we are building up a very, very strong team. Okay, and this is required because when we are now trying to look at entering into many of the global markets, especially developed markets, this requires investments in people. Because this will come first, and then you will start realizing the turnover and the top line. So I am pretty confident that this is definitely going to be the strength of TVS Motor. So the salary cost, we are not investing in ICE. We are investing behind areas where we need to really look at the future and areas where we need to improve our domain expertise.
Fair enough. Sir, lastly to Desikan, sir, if you can just help us understand the consolidated operation outside of financing arm, sir. There have been losses which had spiked up last year and during first half. How are we trending there in terms of the control on the losses there, sir, or on the expenditure side? Thanks a lot.
Yeah, let me start with finance because they have done very well this quarter. For the quarter, the PBT reported yesterday was 229 crores as against the sequential quarter of Q2 of 179, more by 50 crores. And again, like TVS Motor, the 9 months ended profit of 566 crores is more than the full year's profit of 511 of last year. As far as book size is concerned, they have crossed the 25,000 crores and the GNPA is at 3.1% And even after the circular on RBI with regard to the additional risk-related capital allocation, the capital adequacy ratio is at a healthy 8.6%. Therefore, the collections have been, as usual, very good. The business disbursements for the quarter is around 7,000 crores when compared to the last year's 6,000 plus crores. This is what, as far as TVS credit is concerned. The other, as explained in the previous quarter also, the Norton-related expenses are more out of accounting compulsions being written off. Otherwise, they are all development-related costs, and it has come down when compared to the previous quarter.
Here I want to highlight only, last time also I highlighted that, please understand, you need to have a healthy product pipeline. And we are now designing and developing and putting that products in totality. And definitely it will take about 6 to 8 quarters to start completely realizing the benefits of that. And as you know, this is going to be a complete portfolio which is going to help Norton to supplement the complete product range what TVS Motor has got today. So I'm pretty confident that going forward you will see a very strong product pipeline from Norton, and that product will delight the customers globally, and it will start doing extremely well. Hello?
Yes, sir, I'm done with my questions. Thanks a lot. Thank you.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Good evening, sir.
Good evening.
Just one perspective from you on EV industry demand, and also competitive intensity. Are you seeing an increase in competitive intensity versus last time we met? And how is the profitability trending for iQube?
See, our profitability is continuing to be strong, okay? But all of us, we need to understand that there are some tactical actions. I think we can expect this from competition. But according to us, pricing is only one element in the process of buying. There are many aspects for the customer. He will look at the product, he will look at the experience, usage, connectivity, infotainment, range, build quality, many parameters he will look at it. So price is only one parameter, okay? And what we should look at as an industry is how we are going to focus on the customer, how we are going to deliver products which are going to be in a sustainable basis. And here I wanted to only look at one thing. Okay, we have seen similar short-term action in ICE also in the past. Okay, there were several tactical actions short-term, and many players have done it, and none of them has sustained. We have seen it in retail financing. We have seen such things in some models discounting heavily. But please understand, consumer understands all this, and they are not going to, beyond a point, help building a brand. And we are talking about an industry which is going to be long-term, going to be very strong, sustainable. And we will very clearly focus on delighting the customer with every touch point. And already iQube existing customers are extremely delighted and happy. They are our brand ambassadors. Currently we have about 400 dealers. We will double it by end of the quarter. So there is a huge opportunity, and we are also going to, we already started exporting. There is a huge market for exports, and we are also coming up with a lot of product in the pipeline. The new product launches are going to come. So these are things which we have seen even in the past. So we are not so worried. And what is most important is we are continuously doing better than the industry. That is what is most important.
Sure, sir. No, that I agree. And in terms of the reach for iQube, in terms of number of cities, how is it right now, and how does it compare to?
I said 400. Okay, we are looking at doubling it in the next 3 months.
I'm sorry, doubling it in the next 3 months?
Yeah, because we use our own existing dealers.
Okay, understood. Just one clarification I had on the other income. There is a mention in the notes to accounts that there was some 82 crores income that has been recognized as part of other income due to a transaction with Sundaram Auto Components. And there is another 37 crores fair value recovery. But when I see the other income, it is showing up 73 crores. So can you please help me reconcile this?
No, the other income, one second, let's go to the notes for a minute. Let me just see the notes. The 80 plus crores, what you indicated is a realized gain of a capital reduction, what we have done through an NCLT order with the wholly owned subsidiary Sundaram Motor Components. And the balance is a notional loss that has been due to fair valuation of the investments due to the accounting standards. The net figure is what is that 73.4 crores. The other income for the quarter ended 30th September and the year ended 31st March includes, that's a separate one, 37.55 and 61.69. So note number 3 relates only to the 82.27 crores of realized gain and adjusted against the notional loss of around 9 crores.
I'm sorry, where is the notional loss mentioned?
No, this only talks about towards the reduction that includes the profit of 82.7 recognized as part of other income. So the net figure of 73.4 is 82.27 minus that 9 crores of notional loss.
Okay, and then where is 37 crores recognized?
No, the point number 4 is the 30th September 2023 for the quarter and for the previous.
Okay.
Yeah, got it now.
Okay, thank you. That's all from my side.
Okay.
Thank you. The next question is on the line of Amin Pirani from JP Morgan. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. So my question is on the export side. You mentioned that recovery is happening, but it's happening, at a slightly slower pace. So, two questions there. A, is the recovery happening due to demand being weak, or is it more to do with currency availability and other issues? And the follow-up on that is, are we seeing further supply-related problems because of the recent crisis on the Red Sea, and is it causing us, in terms of higher freight rates or unavailability of containers, and what's the outlook for that? Thank you.
I think on the first item, whatever you highlighted, definitely some of the markets we are seeing both depreciation of the currency and also sometimes the delay. I won't say currency availability is not there, but there is a delay. Okay. In terms of when I said recovery, we went through last 6 months back a dispatch kind of a control because the retails were slowing down. So all that is corrected. Now we don't have any problem in terms of more and more customer retails happening. We are able to dispatch more and more. Now coming back to the current crisis, whatever you said, it has just started. There are some initial feedbacks on container availability, some pricing going up. I think we have to very closely watch it. Okay, so it's too early, I would say, but it is seen this month, for example.
Okay. Understood. That's helpful. And secondly, on the the rural recovery that you talked about, are we you talked about the EV related launches that you were expecting. Is there a plan to launch motorcycles or scooters at the lower end if you are seeing a rural recovery, or you think the portfolio on the ICE side is more or less complete as far as TVS is concerned?
See, we have to constantly look at the strength of TVS is constantly looking at the customer segments and looking at where are the products we can come up with. So that will continue. I think we should not be so much worried about the rural challenges, what we have gone through in the last couple of years. See, given the population, given the kind of infrastructure investments on roads and kind of connectivity, whatever we have seen, and the mobility needs, I think two-wheelers, I always believe that it will grow more than 10% CAGR, definitely. And rural will also start growing. I think what we have seen is the ability of the rural not able to manage the cost increases and price increases, and their income not growing in line with that. Okay. On the EV side, again, the product pipeline is based on the customer segments. There may be some short-term challenges in certain areas, in rural. I think we have to look at a long-term point of view and then invest in these products and develop. Okay, and we look at the customer segments. Okay, and more and more closer to the launch, I will tell you what kind of products and when we will be launching.
Sure. Thank you. Sir, just lastly, can you help us with the financing penetration that you have seen in the quarter?
This is retail finance?
Retail finance, yes.
Yeah, just a minute. I'll tell you. Retail financing is now healthy this quarter thanks to the Diwali season and the festive season. We have seen almost 65%. Okay. Which according to me is one of the best numbers I have seen in retail finance.
Yes, that's true. Thank you, sir. I'll come back in the queue.
Thank you. The next question is on the line of Raghunandan NL from Nuvama Research. Please go ahead.
Congratulations, sir, for strong set of numbers. Sir, firstly, a follow-up question on the EV side. In earlier quarters, you had indicated that we have achieved a gross margin break-even for electric two-wheelers. Has margins further improved considering the fall in battery prices and continuous efforts on localization and better scale? And, going forward, you should also get more benefits in terms of PLI incentives. So how are you looking at it? Would you be retaining the benefits or partially passing on the benefits to support EV penetration?
See, like I said, the margins are positive and it is definitely improving. What is most important is this is an investment phase in terms of products and technology, and we have to come up with a range of products and then grow good volumes in the market. So that is the focus we are in. But we are happy on the journey of margins and how it is overall panning out. And we are also now just started products into the global market. There's a huge opportunity there. So if you ask me, the priority is to look at delivering the products which are in the pipeline, continue to grow the customer satisfaction and the volumes, concurrently look at how do we cut down the cost and continuously improve the margin. Got
it, sir. And on the overall raw material cost, there is some decline on a QOQ basis. So just trying to understand what were the factors which led to this decline, because even on a QOQ basis, if I look at the share of exports, that has slightly come down. So despite the exports coming down, there is margin improvement. If you can talk a little about what helped the margins.
See, quarter on quarter, if I look at last quarter to this quarter, material cost has reduced mainly due to sustained material cost reduction. And as you know, the commodities are almost flat. And we have not done any major price increases, practically no price increases in the last quarter. Okay, so, and if you compare the same with last quarter, last year, similar quarter, definitely there is a softening of material. We have done some price increases vis-a-vis Q3 of last year. Okay, and please remember all these are with the EV also. So overall, I think the contribution management, the material cost reduction, overall product mix, and focus on opportunistic price increases have helped the company to improve the raw material cost as a percentage, and we are sustaining that and we are moving forward.
Got it, sir. And just lastly, Ronin as a product has received a positive response. So how would you target improving presence in cruisers in terms of products, network, or riding ecosystem? What are your thoughts? And would you bring in more models either under the Ronin brand or Norton brand in future to improve your position here?
Ronin, the initial response has been pretty good, and we are happy. I think we have to sustain. We have a very clear plan to sustain this momentum and build it. as a big brand. Norton, I already told you, we are coming up with a very clear product plan. Closer to launch, I'll give you what kind of products, and definitely we will focus India also in the journey, because that Norton complete portfolio is going to supplement the overall excellent product range what we have, what TVS Motor has.
Got it, sir. Thank you very much and wishing you all the best.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi, sir. Just to quickly clarify, on the EV product launches you mentioned, will you be launching more products in fourth quarter itself or in FY25 are we referring to?
These 4 quarters, including this quarter, you will see launches. Closer to the time of launch, I'll let you know. But we have a very, very good product pipeline in the EV side.
Okay. And in that context, where are we in terms of capacity for EVs? How much you can do for iQube and overall electric two-wheelers?
Capacity is not a problem. I think we have taken enough countermeasures and investments in terms of the right capacity. Plans are ready. We have got a very good supply chain in India. We have developed them. So at best, we require about 3 to 4 months to increase the capacity. So we always plan ahead along with the product launches. So I'm pretty confident on that.
Got it. And lastly, can you update us on the PLI incentive for iQube and other models which we will be launching? Where are we in that journey?
We are in the advanced stages. The PLI approval process for TVS is in advanced stage, and we will let you know as soon as we get the certification is getting completed.
Okay. And lastly, Bikram sir, can you talk about USD INR realization for this quarter, dollar realization?
Yeah, one second. It's around 83 rupees.
83. Got it, sir. Thanks and all the best.
Thank you. The next question is on the line of Hitesh Goel from CLSA. Please go ahead.
Thanks for taking my question, sir. Sir, can you shed some light on what is happening in export market? Because like you pointed out, this Red Sea crisis is just starting. We are seeing inflation being very high in the end markets in Africa, Latin America. So, can you give us some country-wise inputs on what is happening in these markets and what are you doing about it?
Actually, African market, there are some challenges in terms of the currency depreciation. Like I said, currency availability is still good, but there are some delays. Inflation is settling down. I won't say it was as harsh as what we have seen in the past. Okay, and in terms of certain Middle East and other markets, it's good. Actually, the market is growing and there is a good opportunity. LATAM is another market, another set of markets. There is a good growth opportunity, both for the industry and for TVS. Okay, ASEAN is another market which has actually done well last year, and we have a very good opportunity there. So overall, I would say that, and India, all of you know how the market situation is. Overall, I think the worst portion of this is over, and we'll have to see how each and every market is going to pan out. And we have excellent product range, so I'm pretty confident that while there could be some delays, for example, this Red Sea, we'll have to see how it is going to pan out. Maybe there will be some little bit of delays in container availability for some time, and then it will settle down. So overall, I'm very happy that our products are very well accepted in many of these markets, and we are able to grow ahead of the industry. And we are also seeing certain markets growing much faster. So we will leverage that depending upon the situation. And this quarter, we are also seeing Sri Lanka slowly opening up. So I'm feeling that international market, we have also seen this kind of challenges in the past. So we have to be very cautious about the market, and we have the right kind of inventories in this market. So I'm looking forward to this year, this quarter, as well as the next 4 quarters. I think we should do well in the overall IB market.
Sir, just a clarification. Can you give us the volume mix of your country-wise or Africa, LATAM, South Asia in 9-month FY24 versus last year? So just to get a sense how these markets are growing.
Yeah, Africa has been the biggest market for us, and now LATAM is growing. I don't have the exact data with me, but Africa is the biggest market, and it is there is a great opportunity for us to do well there. LATAM, we have just started about a couple of years back, and the industry is huge in LATAM. Middle East also very good market, and we have just started in the last few years. About Sri Lanka used to be a great market. Now it was closed. Now slowly opening. I would say that the industry is very small as of now. From the other markets like Philippines, Myanmar, they are all opening up. So there are growth opportunities there. Each country is in a different kind of a situation. But the good thing about our product range here and also Indonesia is definitely helping us to grow in this market disproportionately. I would put it that way.
Okay. So my second question is on electric two-wheeler. Basically, you're going to get this PLI incentives, right? Would it get passed on to the customer to improve adoption, or would the industry or you guys would keep some part in the margin? Just to get a sense, because
we always look at the customer and the customer segment. Okay, these are thanks to the government, whether FAME or PLI. These are all incentives to promote this industry. I think if we look at the total investments and the people and the total kind of product range what we are developing, okay, these should be taken as real support from the government. I think we should not plan for any kind of other way. For example, FAME, all of you know how it went down. I think we should be very confident about products and the customer segments and engage with the customers and expand the market. That should be our approach. Okay, and pricing, again, I am repeating, pricing is only one factor. There are many other factors when the customer look at a product. And what is most important is, I have always seen, you have to build the brand. You have to build the resale price. Here also, exactly like ICE, when the customer point of view, he will look at the brand, whether it is getting built over a period of time. And we want to be playing the sustainable game. And we are pretty confident that thanks to the government, this PLI, we are all very, very good for designing and developing and building Atmanirbhar Bharat in a big way.
Great, sir. Well said. Thank you very much, and all the best.
Thank you. The next question is on the line of Gunjan Prithyani from Bank of America. Please go ahead.
Hi, team. Thanks for taking my question. I just had a few clarifications. I just wanted to know this 300 crore investment, where is that being deployed in this quarter? And if you can, give us the number on the capex and full year subsidiary investment also again, please.
One second, please. So we have invested in Norton around 80 crores, and the other subsidiaries around 100 crores, 120 crores. As far as, we have also invested in some technology company like Kilowatt, and this is what I think overall. We have invested in Norton, SCMG, and Kilowatt.
And a little bit in TVS Digital.
Yeah, and a little bit in TVS Digital.
Okay. And what is the guidance for full year now on the sub-investments? I think we're already running at roughly around 900 crores so far, 9 months, right?
Maybe another
950 crores.
200 crores.
Okay. Anything on capex, sir? Full year capex?
CapEx, I think last time we highlighted around, including EV, predominantly on EV, 1,000 crores, including all the products in EV and the product pipeline, what we are looking at.
Okay. So overall 2,000 crores, 1,000 on the vehicle side, and the subsidies would be about another 1,100 crores. Okay, that's clear. So the other question I had, maybe it's just a clarification or repetition. You mentioned right in the beginning that there have been some tactical moves in the EV market. Can you just talk about what sort of changes that you've seen in the competitive? Because clear in terms of ramping up the business on 20,000 units a month. And then we've seen that number come down. Is there any change that you've seen in the market environment that has slowed down our ramp up?
See, I like I said, tactical, all of you understand what is tactical. And competition, how they are looking at it. We are very clear that we want to build brand iQube. And it is doing extremely well. It has grown ahead of the industry. What is most important is you have to grow ahead of the industry, and ahead of the industry very respectfully in terms of overall, on one side, customer engagement and customer NPS growing. On the other side, the gross margin of the business growing. So this is exactly what we have done. And we are only present in 400 touch points today in EV. We have got a huge room to improve that, and just now we have started the international business. So overall, we are pretty confident about iQube. Okay, how it will move in terms of both numbers and market share, and how the other products which are going to be launched in the market is going to help to further grow the overall EV proportion for TVS.
Okay. So, sir, if I what I understand is basically we will not engage in these sort of pricing, sort of discounting scenario. What we want to do is get a more product play. We are fine to have little bit aberrations here and there. Our strategy is going to be straightforward. We don't want to be price disruptors, right?
I did not say any of that. I said we are focused on the customer. We are focused on engaging with the customer. Pricing is only one strategy. Customer looks at it wholesome. He looks at every aspect of the product. He looks at the total cost of ownership. He looks at every element of the experience he gets. That is the way sustained brands are built. And that will be the focus of TVS. That will be the play. We will always. And we have done it in ICE, and we have seen that. That is the reason we have grown on ahead of the industry with less than 30 days of stocks with every dealer. Completely cash and carry even in the domestic market, and consistently improving our quarter-on-quarter EBITDA.
Okay, got it. Just last clarification, sir. On the EV business, is there, given that you mentioned earlier a lot of investments being made on software, engineering, digital, and a lot of this is around even the employee costs around EVs. Can you quantify the drag that we're seeing because of the EV business on the P&L, like in terms of either absolute number or?
No, I don't look at it as a drag. I look at it as an investment. If India has to be Atmanirbhar and TVS has to become a global brand, we have to invest in the product. We have to invest in technology. I never look at it as a drag. I look at it as an investment.
No, I'm just trying.
I look at it as today, if you invest, you will get the benefit. Last time also I highlighted TVS CS. You are seeing the good results today because we invested very, very clearly few years back. Today, PT TVS is giving profits because we invested in the product. Today, you are seeing TVS growing ahead of the industry. Customers are delighted, and we are seeing sustained growth in our EBITDA only because of investments in people, investments in products, investment in technology, investment in marketing. So that's all we will do.
No, I was just trying to get at ICE profitability, but it's fine. Thank you so much, sir.
Thank you. The next question is from the line of Vipur Agarwal from HSBC. Please go ahead.
Yeah, hi sir. My question pertains to Apache portfolio and more towards 150cc to 200cc industry. How it has changed in last 2 to 3 years, especially after the launch of Raider and other premium motorcycles in 125cc, and how do you see the growth outlook for this segment over next 1 to 3 years?
I think both as far as we are concerned, Apache is doing extremely well. Raider is also doing extremely well. Okay, and this segment, according to me, will grow, because there is very good infrastructure development, and the demography is also pretty good. India is young, and many people want this kind of premium products in a big way because they are very aspirational. This is the segment which, according to me, is going to grow. And 125 segment is a very good segment where people will look at many technology what is available in the high end is also available here, and Rider has done extremely well. If you look at Rider everywhere, I think it has got state of the art, many new technologies, and it gives the best brand for this set of customers. So my view, these segments will do extremely well, both 150 and above and 125 and above.
Thank you, sir. Just a follow-up on this. So, if you see 4 years back, when somebody has to buy a premium bike or a sports bike, they had to go beyond 150cc and above only. Now they have a good bike option like Raider available at a cost of around 1 lakh rupees at showroom. So what kind of changes you are seeing in the customer perspective? Like, do they still want to go for 150 or 200cc? Do they want to spend 50,000 rupees more on the same bike? I'm just trying to get a perspective from next 2 to 3 years. Do they still I understand metro and tier 1 cities customers will go, but what about tier 2, tier 3 cities customers?
I think what is most important is, again, I want to repeat the same thing. Price is only one factor. I think people look at the features, technology. What you get in an Apache is completely different, and the set of aspirations of those customers are completely different. And if you look at a 125 Raider, it is completely different. And we are very clearly positioned, depending upon the customer segment, what technology, what kind of features, what kind of design it is going to attract them, and how we are going to deliver it to them. Okay, that is the ability of any company to look at the customer segments and design and develop the product. So both are very, very important, looking at the customer segments and delivering it. Price is only one aspect. Please understand, when people look at wholesome, okay, people look at what is the kind of, overall customer value through technology, infotainment, the kind of connectivity they are looking at in a product. Okay, we have seen it not only in two-wheelers. You look at any kind of products what the consumers look at. Okay, consumers look at, and thanks to the retail finance, when they come, they don't have to invest everything at the upfront. They are able to look at, initially some money, and then they can always upgrade on a 36 months or a 24 months. So to me, the aspirational Indian customers are very aspirational. Not only Indian customers. If you look at any developing economy, they are very, very aspirational. They look at the product pipeline and say, okay, this is really good. I want to be going for this kind of a product. What is most important is you have to keep Apache brand differently, Raider brand differently. So we have seen actually both can supplement each other, and we can draw more customers to look at us, and we can grow faster. That is exactly what is happening with Raider present there.
Understood, sir. Thank you. Lastly, one again follow-up on Apache again. So Apache has, I guess, one of the best-in-class aerodynamics in terms of sports biking and speeding and everything. So do you plan any kind of special marketing happening like other OEMs are doing for their premium portfolio to give a boost to Apache portfolio?
I respect all competition, okay? I look at the customer, and we are doing appropriately what the customer wants. And we are extremely happy for the response what we are getting in Apache, the response what we are getting in Raider.
Thank you, sir. Thanks, sir.
Can we take the last question, please?
Sure, sir. The next question is from the line of Pramod Amte from InCred Capital. Please go ahead, Pramod.
Yeah, thanks for the opportunity. So considering the amount of investment Norton is doing, would you help us understand the market opportunity there and which segments you are trying to target over the next 2-3 years period? As you clearly said, it will take 2-3 years to realize the product benefits. That's one. Second is, wanted to know, considering your success in EV in India, how are you looking at the opportunity for e-3-wheelers in the next 2 years perspective?
In terms of Norton, like I told you, it takes 6 to 8 quarters for the product pipeline. We need a good set of products when you come up with when we start operations of Norton. And as you know, the premium and the super premium, actually Norton is super premium category, specialized category. This category is growing disproportionately in many markets. Okay, and there is a huge opportunity for TVS given the kind of capability, design and development capability and quality orientation what we have. So Norton, at this point of time, we have a very clear roadmap, which markets, what kind of volumes and how we want to penetrate. Closer to launch, I can give you more details. Okay, but we are pretty confident, like I said, Norton is going to add portfolio for TVS and it is going to deliver very good results for the company. Now coming back to E3-wheeler, we are in the advanced stage. This is one area which is also going to do extremely well in the market. Okay, closer to launch, again, I can give you more information about E3-wheeler, but it will do extremely well because, not only in India, we can look at the markets where we are exporting. This change is going to help us to have a better portfolio in terms of three-wheelers.
Okay, thanks and all the best.
Thank you.
Thank you everyone, and once again, happy and prosperous 2024. And you have seen a quarter with the best results on operating revenue of 8,245 crores, best EBITDA margin of 11.2, and PBT for the year 2,100 crores, crossing in 9 months, crossing last year's number of 2,003 crores. I am very confident that our focus on customers, we will continue with the kind of portfolio what we have, and we will definitely leverage the scale benefits and premiumization and material cost reduction. And quarter after quarter, we will continue to improve our EBITDA journey. Thank you, and once again, Happy New Year, prosperous New Year to all of you. Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Batlivala and Karani Securities India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.